about, as we know, things have changed with the banks, and being able to get loans has changed as well. So can you update us on what's happening there?
Yes, sure. Banks are always changing their rules and adjusting things as they go along, and because it's spring at the moment and interest rates are so low at the moment, they've come out and they've got some new offers for people who have low deposits, who want to get into the market. They're sick of renting, and maybe first home buyers or even people that have owned a home before. If they want to get into the market, the banks are now lending 95% up to 98%, with people who can get a deposit from the sale of an asset, or they can get the deposit from their family, their mum and dad maybe, or someone that's going to lend them the money.
Okay, so what kind of asset will we be talking about now?
If they were going to sell an asset?
Yeah, I mean, I thought you said the bank would need some kind of asset, or they have to sell an asset.
If someone's got no deposit at all, but they want to buy a home, they've got good income, they're sick of paying a high rent.
Yes.
The mortgage payment's probably lower than the rent payment, but they can't get into the market because they don't have a deposit.
Right.
All the banks want a deposit. So,
which is 5%.
Yeah.
Say.
So then we're trying to help people and figuring out a way that they can get to 5%. So what if they sell something that they don't really need that much? If they need the home more than they need the second car, for example, if they have a second car without a loan on it, or they might have assets that they don't really need that much, or they can sell them. Generally it's a motor vehicle, car, motorbike, caravan, anything like that, a collection of something.
Yeah.
Something that maybe that they could just replace later.
Yeah.
Or save the money and sell something. It's very popular that people get the money by borrowing it from their parents, or the parents borrow from a bank and then give that money to the kids.
So the good old bank of mum and dad, hey?
Yeah, it still works. It still works.
Well, it's nice to see, I guess, the kids to kind of leave home and get their own independence.
Mm-hmm.
So it is a good thing.
And it doesn't always have to be a cash loan from the parents. The parents might say, well, we'll be a guarantor for your loan. And the parents aren't handing over any cash. They're saying, well, we've got our family home. The bank can have a part of that as security. And that becomes then a guarantor security.
Well, can't they just be the guarantor on the 5%?
The way it works is they need to be a guarantor on 20%.
Okay.
And the reason for that is the mortgage insurance companies don't get involved if there's guarantors.
Okay.
Okay?
But right now, it's actually a really good time for buyers anyway, whether it be a first-time buyer, any
Yes.
buyer in particular. It's a really good time because the interest rates are lower than ever.
Yes, that's why it's a great time. 2.99%, rates under 3%, variable rates at 3.15%. It's
So-
the lowest in history.
Okay, which is awesome. So it's a great time for people to get into the market. So if they had they could have a fixed term
Yes.
for 3 years,
Yes.
and that would still be at the same rate?
Yes, there's special deals all the time that vary between the banks, but 2.99 fixed for 2 years or 3 years.
And what if you get a 5-year? Does
Yep.
it change, or it's still the
It's a
same?
little bit higher,
Okay.
higher rate, but they can fix it 5 years as well. And it's the benefit is that you know your repayments can't change.
Which is awesome.
Yeah.
So, and at the end of the day, we all kind of like have a 5-year plan.
Yeah.
So it's worth talking to you if you're thinking about, someone's thinking about, getting in on the market and buying their property. Because we all want that security. It's like with work. You work, you're getting your paycheck at the end of the month, and you know how much rent you have to pay, rather than it going, up and down. At least you know where you stand and you can lock yourself. And 5 years isn't a long-term commitment.
Good for the budget.
And it's a great way to start, because after 5 years, you can re-look at your situation and decide whether you want to move or stay there, and you re-look at the mortgage you've got.
Yep.
Because by then there may be different deals on. So
It's very rare that somebody can't get into the market and buy a home in this market with low deposit home loans.
yeah.
As long as credit is clear and there's no defaults on a Vita credit file, it's generally pretty easy. We can figure out a way. It might not happen straight away, But as long as there's good income, enough income to afford the loan or to afford high rent, then if you're paying high rent, there's usually no reason why you can't pay loan repayments.
Yeah.
So it's a matter of getting around to qualify for that loan, and sometimes it might mean that you've got to wait a little while, maybe 3 months, to save a little bit more money. But after that time frame, then you can get into the market, and my job is to help people get to that point where they're ready to get in and buy a home.
Okay. Now, I just want to throw something else out, a question out there, because there might be someone sitting out there listening to this who's interested in purchasing maybe their first home, but maybe they haven't been working for the last 6 months for whatever reason, but they've got a good work, employment history, but maybe they haven't worked for 6 months. What would you say to them? Is it about working for a period of time before you can approach a lender? What would it be?
It's a good question. The general rule is that you need to be in your job long enough, or be in your job without a probation period. And generally the probation is 3 months,
yes,
or maybe 6 months. As long as you don't have a probation period, as long as there either isn't a probation or you've passed it, then that's fine.
Okay, so just past your probation period.
Yep.
So there you have it. If you passed your probation period, you could be eligible to get a loan.
And some employers don't even have a probation period, so you can start there 2 weeks ago.
Wow.
And as long as the employer provides a letter for us to say that there's no probation period,
That's awesome.
that's the way around it.
I didn't know that. So if you just started somewhere, you may be able to get yourself a loan if there's no probation period. So if there's anyone out there right now who's thinking about getting into the property business and wants to buy their first home or second home or even an investment property, I know things would be slightly different for an investor, but still, I'd highly recommend that they give you a call because you're a bag of information. So if it's just a thought in the back of your head and you're not too sure what direction to go to, give John a call, because information, just to be informed, is to be empowered, so you can make the right decision for the next step to where you want to go. So John, on that note, I just want to thank you again. It's always great catching up with you.
Thank you too.